Hello and welcome to round two of JB. We were just on a class on long verticals, and we're back for trading the trend. Question we always ask ourselves every week is what trends are you riding? Boy, there's some trends out there, and we'll talk about those here today as we focus on really short-term and intermediate trends. And we also have cameraman in the chat. We welcome him and welcome to all of you. We also have Josh coming back 2 times as well. So we'd like to welcome Bill, Thomas, Ocean Life, Ricebird, Silas, Villager, and many others. Welcome to all. Let's go ahead and hop right in. Now, remember when we talk about stocks, and if we bring up options, remember options carry a high level of risk, not suitable for all investors. Also, the information here is provided for general informational purposes only. Also understand that Schwab does not recommend the use of technical analysis as a sole means of research. On a few examples we'll look at today, let's bring up some of those fundamentals to really kind of see what is going on with some of these charts. Are some of these charts moves, are they warranted? Is there anything underneath these price moves? Like to kind of at least see where these fundamentals are historically, but also where maybe what they're forecasting, okay? And there's a couple stocks I want to bring up to kind of talk about that. Also, remember, we will use the Paper Money software application for educational purposes. And also, I ask you to practice alongside in your Paper Money account so you really get a feel of like how it might work, okay? Or is this something you would consider? The way you find out for yourself, Paper Money, do the paper trade alongside with us. They're not recommendations, but that way you can really get a sense of what we're teaching. And then also it's a follow through because we'll come back and review those trades as you'll see here today. Now, also remember that investing involves risk, including loss of principal. When we talk about short options, they can be assigned anytime up to the expiration, regardless of the in-the-money amount. The buyer, the long investor, controls the right to exercise. If the investor's short, they have an obligation. And also remember, we will talk about the option Greeks from time to time to reference what those mean and why they matter. Today, we'll talk about kind of what are we seeing in terms of trends. I want to talk about 2 things I posted on X that I think are kind of interesting. And you'll kind of now, I'm going to kind of now, expose why I've been kind of talking about one of the strategies that I've been talking about. Okay, I haven't said it before per se, but I want to bring it out here today. So you're going to be the first to hear about it. Now, just real quick as we hop right in, I want to go to the live platform. Let's just take a quick look at where the SPX is, okay? So the SPX, if we take a look at this, what are we on, high 55 now? I mean, you lose track, okay? This is a good thing to maybe lose track of a little bit. But really, the green moving average line has really just been a nice tool to kind of tell us about momentum, okay? If we look at the 20-period moving average, it's been a nice little tool to kind of tell us about what's going on there. And it's really been steady Eddie. The crossover happened back here, and it's just been nice ride to the upside. We've only had short, shallow pullbacks, which again is a definition of momentum, okay? But brand new high, okay? When you look at the NASDAQ, which is something we've kind of been focusing on, you're going to see the NASDAQ, again, broken record, but we'll keep spinning it. Brand new high again. Russell, smaller caps, not seeing that same participation. Not horrible performance for the year, but just in the short term, not getting that same move. And if you pull up Mr. Dow, brand new high yesterday, bearish engulfing here today, but just kind of not showing that same punch that we're seeing in the NASDAQ. Now, one of the things we've been really showing is when you look at the trends, okay, on the NASDAQ and the S&P, trend 3 for the NASDAQ, trend 3 for the SPX. Many of you like trend 3. You've been a good boy or girl, maybe you continue to get that. We don't know how long that's going to go for, but it sure could be nice. Now, the relative strength, if you look at that, what you're going to notice is that's the only one that's really been painted in that green color for quite a period of time, and you're going to see the SPX getting a little push back to the upside. But the other ones, Dow, Russell, just not performing that great. Remember, we said we're going to keep an eye on that VIX. VIX still is cemented. Hopefully it stays like that. Cemented down at 13. Do not want to see that go up, because if it goes up, that could mean that these other NASDAQ, S&P, Dow, and Russell, they might be pulling back. We will continue to watch that. Now, when I'm not teaching, if I see that, I will post it on my X page. That's why you want to be on that page. Now, Also, real quick, when we go back just to briefly sectors, pull this up, there was only 3 sectors that were really pushing: tech, consumer discretionary, and communication. And if you look at kind of, we rank this, same thing, any changes here? Well, kind of one of the changes that we're seeing, actually, no, that's not. I faked myself out. We're seeing there's discretionary still, there's technology still, SPX, I put in there so we can kind of see it, the benchmark, and then you see communication services. So there's no change in those tops. Now, you got to remember is when you look at the weekly performance on some of these, okay, some differences there, as we can see that. When we look at, is there anything that is in red, okay, that is showing positive performance? The answer is no. They're all negative, and the top 4 are positive. So a lot of times people think that these could change day to day. They could, but sometimes those trends can be more, they could be longer. And so far, we're seeing that those trends, these discretionary tech and communication services, they're still moving to the upside. Any questions with that? Okay. One of the reasons why we've been talking about collars quite a bit is because, and I'm going to bring up the example, one of the stocks that's in oh my gosh. I mean, how much more? I mean, how much more could it go up? Okay. So the example that we did the other day was on Amazon. And I think when stocks are trending up aggressively, people are scared. Okay. They tend to be nervous. They don't want to be the last person. Bill, you remember this? They don't want to be the last person that puts the star on top of the Christmas tree only to have someone pull the ladder out. And now where do they go? Okay. So sometimes it can feel like that. Bill, you remember that conversation? Now, so the reason why we've been talking about collars is because we're trying to participate to the upside. Okay. We're trying to participate to the upside, but we also kind of want to say, look, I want to have a defined risk to the downside. Let's take a look at one position, and then we're going to just talk about management of it. And by the way, there was a question on this. So 2 hours ago, approximately, we did the example of doing a collar trade, okay? And we have a trade down here. And remember, when you come to my classes, you're going to see that we don't just talk about new trades, which we do. We'll also talk about last trades. We'll talk about past trades as well. And by the way, you got to talk about both, okay? So that way you can kind of, because it's not just about putting them on, it's about how do you manage the thing. Now, so we'll talk about that. That was put on Tuesday on the Investor Master Series, okay, at 11 a.m. Eastern. So I'll come to that in just a second. The question that was asked was, how do you put this position on all at once again? Okay, so click on the ask price of the stock, check. Go down to where it says single order, and then go to where it says first triggers SEQ. If you do that, what it's going to really do is if now I pull up any of these options, okay, what that's going to do is now when I come to, let's say, remember, all I did is change that, first triggers SEQ, and then from there we could say I'm going to sell this call, and I'm going to notice what it does. It puts the short call right there, and then number 2, we can come over here to the put side and buy that put. And what you're going to see is it's really step 1, 2, 3. It allows us to add those positions by just changing that to first triggers SEQ. All right. So let's kind of expose now. Exposed. Why am I talking about this? Well, does anybody remember what happened in 1999? You remember that? It was going really well until it didn't. Right around about mid-2000, all of a sudden, man, wheels fell off the wagon. Okay. And we're not saying that all companies are the same, but I think the one thing we have to at least be mindful of is trends do not last forever. We as trend investors, we're trying to ride the trend, but at the same time, we want to kind of make sure that there's defined risk on these trades. The problem with the stop is it doesn't guarantee a fill. It's a trigger to sell, where when we buy the put, it's a right to sell at the strike price. Now, we'll talk about 2 of these today, but I'm going to come to this in just a moment. So what I'm going to do is I'm going to kind of use our little calculator sheet of paper, okay? And this is where JB tends to be like a little nerd, but I'm fine with that, okay? You can be whatever you want too. Now, I'm going to kind of just type in the numbers we did on this, and I want to kind of just talk about management. And I'm going to also talk about one where we did not enter it all at the same time. Okay? So what we got here, and this is our just kind of little sheet of paper that we used on Tuesday. Now, when we look at the stock appreciation from 211 to 220, there's your 807. Question now is, did we get a credit or a debit? Well, we collected 455 up down here, and we paid 380. Well, that's a credit of 75 cents. So we'll type in 75 cents there. Okay, now, what was the maximum gain? Well, the maximum gain on this position, if you add those two up, was 882. So I want to kind of ask myself, well, how much do we have right now in total? Answer: we have $326 of the potential 882. So if you don't mind, let's just kind of put that as a little percentage there and kind of say, what percent do we have? Answer: in 2 days, we have about 37% of the maximum 882. Now, these are I'm not even going to say that word. I just won't go there right now. Okay. Still trying to clear it up. So the biggest, okay, lucky you're not me. Now, here's the deal. So we have 326 of the 886, 37% in 2 days. Now, if that number actually goes to 50%, that investor might say, James, I'm going to take it down in the first 10 trading days. And we talked about that on Tuesday. So first off, I want to also kind of go back to one trade. So on that Amazon example, that one is actually still doing quite well. And it's been remember, simple, okay? Not complicated, okay? So if you can do this, you got to tell me, okay? The first entry sign, the 10-period moving average going green, fine. The 20-period moving average going green and or the moving average crossing over, whatever comes first. And it looks like you got that happening on the same day. So you really had kind of the second confirmation or third confirmation on the same day because the 20-period moving average went green and the crossover happened. Now, you just don't know which one's going to come first, okay? So this is the earliest entry, okay? If you said, I want more confirmation, you might wait to the second or the third. If you wait until the third, you just got to understand you're buying more elevated off support. The confirmation ain't free, okay? Recognize that. Now, I want to kind of speak to one that's getting a little bit of a move here today, okay? We saw Microsoft poking its nose above the area of resistance. Now, I would like you to say all together, resistance, okay? Now, we take a look at resistance, okay? Now, this is a higher price dollar stock. Why didn't you do this example? Well, usually on stocks that are higher priced like this, someone might say, James, I don't have the capital to buy 100 shares of stock. Noted. You might do a long call vertical instead. But I'm going to show higher price, lower price dollar stocks. We did PLTR about 90 minutes ago. Let me show a higher price dollar stock, okay? So what I'm going to do is I'm going to go to MSFT. And what you're now going to notice is, if I bring up that, we're going to go to the charts for just a moment. And if we were to ask ourselves, well, what is this? This is really like a horizontal breakout. Now, the difference between Microsoft and some of these others is we're kind of maybe coming out of a basing pattern. And if you look at this, we had a prior high there. Let's kind of mark that. And you're going to kind of see that we had like a recent low down there. We kind of had another higher low right there. And then we had lots, okay, of support levels right here. Now, I'm going to tell you something. Man, there's a lot of people that know a lot of stuff, but it doesn't mean they do anything, okay? Now, when I lived in the South in Bowling Green, Kentucky, and a good old boy said to me at a gas station one time, he goes, James, down here in the South, we don't listen to what someone says with the tongue in their mouth. We watch the tongue in their shoe, their actions. And really, when you watch traders, man, it could sound phenomenal. But really, you want to kind of watch the actions that they take, or do they even take any? Okay. Now, so here's the deal. Let's kind of practice on that tongue in the shoe. Let's practice on taking a little action and maybe trying to get some directional bias. Now, what we're going to do is going to go to the trade tab. Now, let's practice this together, okay? Now, what I'm going to do in this case is I'm going to click on the ask price. We are in the IRA account. Now, this is going to be a big position. This is going to be outside the norm that we normally don't do. But again, when it comes, you might say, well, James, if you buy $44,000 worth of stock, that's a big position, noted, but the reward and risk, or the risk, is not going to be as much as we really think, because we're buying the long put. So could you buy bigger positions than we normally take? Yeah, you could. But the important thing is to manage the risk. Okay, so let's do it quickly. I'm going to click on the ask price. What do we do now? Oh, did what we did before. Go down to First Trigger's SEQ. Bang. So the first row there's your shares. Step 2, what do? Well, we're going to go to about 20, 50 days to expiration. And what we're going to do is we're going to sell that call. Okay? Now, we can't just make an assumption. The first thing I like to look at is that bid-ask spread. We're looking for a bid-ask spread probably narrower than 20 cents. Now, if it's me, and I'm looking myself, I mean, it's my eyes, I also like to kind of see the open interest, 7,800. I also kind of like to see, let's say, what's the volume, okay? So if I look at that volume right there, 864, 7,800. There's some liquidity there. Probably knew that when we look at the bid-ask spread. Fine. Now, if we go back to this, let me just put that back, go over here. We're going to click right on the 455 there, and there it came to with row 2. And then over here on the right-hand side, there's the 435. We're going to click on the 635 right there. Now, what's kind of the problem with what we're doing? Well, when we clicked on the bid, it's just giving us the bid price. So on that row of the call, I'm going to try to move up the order to 755. Try to get a little bit more for Daddy, or the investor, I mean, right? Now, on the put side, if you're the buyer, you might say, look, for me, the investor, I might not want to pay 635. I might want to maybe only pay 630. So just be mindful of when you click on the bid or ask, it's going to put the low price on the bid and the high price on the ask. So it's okay to move those around. That's all I'm saying. Now, let's run these numbers real quick and kind of, so if we bought those shares at 443.69, okay? And remember, it's 100 shares. So we're talking about 443 times 100 shares of stock. We're talking about a $43,000 investment, okay? Now, if we looked at the portfolio value of 278,200-ish, if we said, what capital size is that? Good question. It's going to be about 16-ish% of capital. Now, if you've watched any of my classes, you know, James, we haven't done that all year long. That's a true statement, okay? But let's say the investor did, okay? So what's the call value? Well, that call value, if you look at that, the short call is at 455, okay? What's the premium? Well, if you got the premium, it's going to be 755. You collect that down here, and you pay that. So the net credit, tell me what the net credit is. And don't just sit there and watch me, because here's the thing. I'm teaching you something. Notice we've done example after example after example after example, and we're doing the same thing over and over again. And then someone at the end is going to ask me, how'd you do that? And I'm like, well, where were you on the previous 10 examples? Okay? So lock in. Someone's talking to you, say, look, not right now. Not right now. I'm paying attention to JB. So here's the deal. Stock appreciation from 443 to 455, 1131. Fine. Can get that. Basic math. Net credit. Credit is just the difference between those two. If you can get filled at that, it's going to be about 125. Okay? There it is. So if the stock were to go to the upside, 1256. All right? Now, what about the downside? See, this is what investors, they're emotionally fearful. That is why they don't take action. They just sit there and watch the things go straight up. But if they understood maybe a strategy where they could go long the stock, which is probably what they're trying to want to do anyway, but then define the risk to the downside, they might take some action. Might. Now, if you look at this, the stock goes from this to 435, gives us a defined risk. Why is it defined? Why not theoretical? Because, well, rights and obligations. Gives you a right to sell the shares at 435 until the 17th of January. This is not a right into infinity, okay? or out way into the future. This is only protection until 17 January. Now, stock loss, but you remember, you got a credit, 140, 125. And so now what you're going to notice is the max loss prior to anything else, you know where I'm going with that, is 744. So if I said, hey, we lost 744, if we do, how much of a loss is that on the portfolio, percentage-wise? Survey says 0.2%. Oh, so you can buy more than maybe 8 or 10% of the portfolio, but you got to really kind of take a look at what's the risk. So the only reason why we would show this example is because we have that long put to the downside. Okay, so that's kind of interesting. And if we lose, it's 0.2. So 0.01 would be 1%. 0.002 is 0.2%. You could also even say like 26 basis points. Okay, so really, if we lose on this position, really not that bad. As we talked and kind of discussed, those prices might have moved on us, and we might have to see, are those trades going to fill at where we think? Notice, I'm just going to read it, okay? Cost of number one, order including commission, okay? 0. Cost of number two, including commission, 755 plus, minus, okay? Now, it's minus because, well, including commission, and you're going to see cost of the order. You're paying for the put, and that's added there, okay? So what we're going to go ahead and do is send the order. And did we get filled? Please. Now what you're going to notice is you got shares, you got the short call, but the one that has not filled is what? That long put. Now, where are we? We got a mark value of 635. We're at 630. Okay. I'm going to just bump it maybe a nickel and try to see if we can't get filled. But the problem is the mid price is 645. And I'm going to kind of go a little higher. That's going to change our numbers on our little basic sheet there. And we're going to see if it can't get filled. Okay. Now, so what I want to kind of do is kind of show right here is the reason why I keep showing these callers is because at some point, these trends are going to come down. And the caller we've been talking about, so number one is we talk about the caller from the point of view is if some of you are very nervous to take bullish positions, a caller allows us to take a bullish position but define the risk. That's massive. Second is we know that with these callers, you can leg into them, meaning if you have the shares already and then you want to do the caller later, you can do that. You'd have to just check liquidity. Now, what I want to do for just a moment is I just want to kind of pull up any positions that we might need to address, okay? So let me kind of just come down to the short put section. And if we look at the short put, what you're now going to see is we have the 130 short put and we have the 100. Could anyone tell me what we might consider on that trade? Okay, the Microsoft put does fill, but it fills 10 cents higher than what we stated initially. Okay, so what might someone do with that short put? Now, I'm calling it a short put because we really have the short 130 strike and we have a long put down at 100. So that's really kind of like a far out of the money put. We would call that kind of more like a cash secured put with a far out of the money put. And we just do that for buying power reduction. Well, the investor might say, well, James, you got about 80-ish% on that with 15 days. The investor might say, I'm going to create a closing order. Okay. Now, as an investor, every day you don't wake up and say, what am I going to buy? It's really, you're trying to manage the previous trades, gains or losses. And when there's not that much more to actually have left to make, try to pull them off. Okay. Or to evaluate, is it something you would consider and try to harvest the gains? We're going to buy that back or try to buy it back for about 33 cents. Confirm and send. Note the cost of the trade, just reading here, including commission. And you're going to see that there's the total. Just want to verify that. Send. And we're going to see that. Now, on that other one, what you're going to notice is the 138, that's at 74%. And remember what we said before, if that long put becomes worth something, that means we got the trend wrong. 138, 111. Now you might be thinking, well, why are you pulling that long put off? That's such a low probability of it being worth anything. That's true. I just don't want to worry about it anymore. Okay, we're going to right click on it, create closing order, buy it back. Try to grab that again. Gains, confirm send, read that line. Is that something you would consider? Close the position down. Okay. Now, are there any questions that you have? Now, Michelle actually says just a slight pullback on SPX. Speaking of SPX, okay, now you'll know for a while we've also been showing an example of a short put vertical on SPX. Can you actually tell me something that we might consider here? On the SPX position, what is that? Now, what I'm highlighting is I'm highlighting the put side, okay? The put side with 14 days left is pretty much done, okay? And we can see that there. Now, what you will notice is with the upside move in the stock, we also have a short call vertical. Now, wait. What is it that you have? If you got a short put vertical, you got a short call vertical, what is that? That's iron condor, okay? And what you're going to notice is on these positions, okay, if this we kind of, I call it like a field goal, okay? And what you're going to notice is the short side, the 5805, okay? What you're going to notice is we want the price to stay up above that level, the price level. And you're going to see the 6050 is right here. What do you want the price level to do? Stay in between the field goal posts. Where's the price? The mark right now is slightly outside, 60.82. Okay? Now, the farther that you get away from the short strike, this is on the put side, that's going to have the money. And we can see that there. It's at 87%. We're going to grab that and take that down, Michelle. Now, this is only going to leave us with the call side. What do we need the SPX to do? Oh, man, we kind of would really like to see the price shank, or I should say, fall down. I know you're thinking, what? I don't want the SPX to fall down. On this position, you do want the SPX to fall down and stay below the 60.50. And we only have 14 more days, and hopefully some of that bubblicious price action can maybe taper some of the optimism and get the SPX to fall back down, take this from a losing position to where it might gain it all, okay? So what we're going to do here, we're not going to replace the SPX position because it's going to make it where it's really too short of a trade. We're going to buy that back, okay? There it is. 20-cent debit. Now, when you have a short put vertical and then you get out of a position, you like to really get out as close as you can to zero. Now, note a little difference in terminology that we don't normally see on an equity option. Cost of the trade, including commission and fees. And you're going to see that if you said, I don't know what that fee is, click on the little box there, and you're going to see that it will kind of give you a little elaboration what that is, and we can see the total. If that's okay, we're going to go ahead and send the order. Okay? So, any other questions there? Yeah, let's just go real. Now, Grim actually kind of mentioned, so let's kind of say we looked at a stock example given. Yeah, not getting, so don't see that. Now, so Vlad says, any practical way of monitoring S&P 500 moving news? You know, so I don't, so when we talk about like the news of the S&P 500, I mean, mainly when you're talking about that, you're just talking about like the price action, okay? If you're talking about like individual companies, okay, if you said, I want to track some individual companies that might have more of a material impact, remember the S&P 500 is market cap weighted. So market cap just being the stock price times the number of shares outstanding. So these stocks, if you said, what stocks am I going to watch in terms of news? You're probably going to be watching what they call the MAGS stocks, which are just really the major holdings, they call them the Magnificent Seven, that really have a higher weighting to, let's say, the Dow, to the NASDAQ, to the S&P 500, and so on. But in terms of like watching news of like what the S&P 500 is doing, I'm not sure if you would need news. I think you just need to pull it up, Vlad. So if you said, what's an easy way to track the news? Pull up the chart. Now, of that chart, you'd probably say, what stocks am I probably going to be watching, knowing that all these stocks are not equally represented, the same? Well, you're going to be watching news on NVIDIA, Microsoft, performance on Apple, Amazon, and Tesla. Now, you're not watching all 500. You're watching the big horses that could actually have more material impact on the indexes, okay? Now, the other thing kind of goes back to, if I bring up, let's go back to just real quick. I want to go back to PLTR for just a second, okay? Now, this has been in kind of, speaking of a stock that's kind of been in the news quite a bit, it's been this one, okay? And this, among many others. Now, what I want to do is I want to go to where it says Analyze for just a moment. Click on Analyze. And what I want to do is I want to go down to where it says Fundamentals. Now, if I go down to where it says Fundamentals, you're going to see that now we've seen Bitcoin had some huge moves to the upside, and some of these stocks kind of have some relation to Bitcoin, okay? Planetary Technology builds and deploys software platforms in terms of intelligence. So I can't say, at least initially, this is Bitcoin, but we're really talking about something like AI related. Now, when we look at these numbers, what you're going to see is this is a company, when you look at its fundamentals, okay? If you take a look at the earnings per share, they have struggled, and then they went positive in 2023, okay? Their return on equity went positive, and so did their return on assets. Better. Now, if we looked at the quarterly and actually said, well, kind of, can we see a little more snapshot on this? Well, going back to 23, 3 cents, 4 cents, 4 cents, 6 cents, 6 cents again. A little bit better. So not a massive earnings per share jump, but at least it's turning somewhat positive. Headquartered in Denver, Colorado. Now, what I want to do is I want to come back to this for just a sec. We know that it's been on a pretty massive uptrend, to say the least. And we kind of also like to kind of go back onto this and say, geez, when they went positive on the earnings per share, when did the stock start going up? Well, it was kind of like early in 04, maybe when they went positive EPS, where that stock started to kind of go up a little bit, based, and then had another positive earnings per share, had another positive earnings per share improvement, had another positive per share improvement, and the stock just started kind of taking off. So there's a point where the business has invested and spent and spent and spent and spent, and they spend all the money that they make. Kind of sounds like many people in the world today, right? I made some money, but then I spent a lot of money, and I didn't get ahead. Here, they're actually making more than they're spending, okay? And it's leaving some positive earnings per share, okay? Now, what I'm going to do is let's go back to, let's say, PLTR, and let's look at the implied volatility for just a moment, okay? So when we look at the implied volatility on the right-hand side, 76, 66, pretty high. So wonder if the investor said, James, I want to go out to, let's say, the 17 Januaries with 43 days remaining. I want to try to use that implied volatility, and I want to try to use that higher implied volatility to maybe sell a pet out of the money. Now, here's what we're going to show. If we sell a put, we have an obligation to buy the shares from the time that we place the trade until expiration. Someone could assign us, meaning we're the buyer of the shares. Now, we're concerned about the downside. Okay, wonder if it goes down. Wonder if all of a sudden the musical chair stops and all of a sudden I can't find my chair, and I want to know how bad could it be. Well, we're going to sell the 65, but we're concerned about the downside. Now, here's the deal. I know a lot of people that know lots about puts. It's not, do you know about puts? Show me the examples that you've done about puts. That's totally different, okay? Remember, tongue in your mouth, tongue in your shoe. Let's show the tongue in the shoe. How do you kind of try to control the risk of the downside? Like we a lot of times show is when we sell the put, if we're concerned about the downside, wonder if all of a sudden this reverses. Let's say the investor says, I'm going to come down on the put side to a delta of 10 or less. Why delta 10 or less? Well, delta 10 or less because you're paying for that put. The more that you pay for the put, the more it eats into your credit. Okay? And it changes the break even and so on. Now, what I'm going to do is we're going to go to the 55. So if you look at this trade, okay, you look at this trade for just a moment, you're going to see that we sold the 65, bought the 55. Okay? Now, why is my credit not as big as before? You collected that, or trying to, and you're paying this. And it leaves us with a credit of $1.76. Now, let's say all of a sudden the stock completely reverses and everything just stops. And the stock goes down to $10. On this type of trade, there is a defined risk setup. And we have, when we sell the 65, it's the obligation to buy now to expiration. And then we have a right to sell those shares from now to expiration. Okay. And the investor controls that because they're the buyer and they pay for it. Okay. Now, what you're going to notice is reading left to right, cost of trade, including commissions. And you're going to see the buying power effect that we need to set aside also matches what the max loss is. We are showing this in an IRA account. Now, if we take a look at this, what we're going to go ahead and do is send the order. Okay. So what I'm trying to focus on is I think when you get stocks that really kind of go up parabolic like this, a lot might see that they're going up, but a lot of investors are kind of scared to trade the trends. So on these type of trades, I'm trying to control the downside, but having some upside potential. That makes sense? Now, what I want to do is fast fire in a couple stocks that might be kind of, for example, showing some setups. Netflix today was quite a bit of a move with a little intraday wick right on the moving average crossover that's trying to happen right now. Now, if I go back to the trade tab and say, do we have any position on that? Well, we did, but we sold out of it about 90 minutes ago. Do we have anything in the margin account? And the answer is no. So I want to go back to just Netflix just real quick. And we kind of joked before that somebody is watching TV. Somebody is. Okay. Now, what I want to do is I want to go back. Now, this is a higher price dollar stock. Noted. And what we're going to do quickly is we're going to come down to the expiration, 20, 50 days expiration. What's the strike? 925. In our examples, we don't like to do something that is so close to being like at the money. We like some intrinsic value. So in this case, we're going to go down to, if we can, and we're going to look at this and say, is that something we would consider? This is 65 cents wide in the bid-ask spread. This is 60 cents. So when you talk about these higher price dollar stocks, you're going to see that there's a little wider spread, but usually we don't see too many. There are some. We don't see a ton of $900 stocks. Now, what I'm going to do is I'm going to go buy vertical. And we're going to look to do, in this case, the 920, and we're going to do the 930 long call vertical. Now, again, in our typical example, you'd probably see that the debit is going to be 5 and the maximum gain is going to be about 5. That's pretty normal. Now, for this example, we're going to do 2 of these. Okay? Now, when we did 2 of them, it's going to be it's going to be 505 per contract. But if we did 2 contracts, it's going to get us to what the maximum loss is wanting to be, which is right about $1,000. Note the commission. And what we're going to go ahead and do is send the order, if that's okay. Now, I'm going to go ahead and do that, send the order. Now, I also want to kind of keep an eye on one of the stocks that we saw a little push on. We're going to keep an eye on is, it does fill, is Gilead. Gilead, and I'm just going to flash some stocks that we might keep an eye on, okay? You're going to see that this is kind of getting into the apex of the triangle. Long hammer yesterday, price rallying, and not a whole lot there in terms of time to get to the point. Does it break up or it breaks down? Keep an eye on that, okay? Maybe set an alert. Also, if we look at, let's say, a stock like PM, Philip Morris. Now, I want to do this as a stock trade. Now, Philip Morris, what you're going to notice if we go to the trade tab, we go down there, and you're going to see that it does have a yield of 4.06, PE of 21, dividend 135, dividend frequency quarterly, okay? And you're also going to notice that the beta is showing negative beta. What does that even mean? It's like really negatively correlated historically in the last year compared to the market to a degree. And what you're going to now notice is we're going to buy the shares of the stock, and we're going to set a stop underneath that plateau of support. Plateau support really being 129. And if we set the stop below 129, okay, 129, less 2%, it's going to be 126.42. 126.42. Dated GTC. So the thing that we do need, and I'm going to go to capital size, wonder if, like we did yesterday, wonder if our capital size is only 7,000. Now, I don't want to say only 7,000, but let's say it's 7,000 bucks. Example given, okay? 7,000 bucks would be about 52 shares. 52 shares. What we're going to go ahead and do in this case is we're going to put a target here. We already have a stop. And if we kind of set the target, now when we have, for example, like a prior high and it pulls back, I think a lot of technicians might kind of like to use maybe a Fibonacci and just kind of, for example, draw from the resistance area down to where it fell down to, and it's going to give us a target. The target above us is going to be the 161 extension, which is right at 139-ish. And the secondary target, if it's there, or we can put it there, is the 200%. Now, the 200% is not a fib. It's actually, and what you're going to notice is it's really from resistance down to the low or the support, that channel width added on top. What we're going to do in closing here is we're going to put the target right at 142-ish. Now, I'm not going to take it from the very high. I'm going to count on that maybe how we drew it might be a little off, and we're going to put a target right at 142. This is a stock trade. No expiration, no strike, just a good old buying the stock with a target and a stop, okay? Now, I want to kind of go back to, we're going to go confirm and send, read that order out loud, kind of watch what's in that red there, verify that if that's something you would consider. We're going to practice trading the paper money account, the PM stock position, and I'll fix that. Now, the one thing is, if you kind of want to also stay up to date on kind of some of the things we're seeing out there in the market, those are also some of the things I share right on X. Probably on average, I post about 40 times a week. So anything that comes across my desk, okay, anything I see that looks interesting in terms of market news, I post it back out and I share those things with you right on my X page. So that's also a place that you can kind of see some things as well and also stay up to date with educational examples, not recommendations, but also some new schedules, scheduling items as well. So I'm out of my time here today. If you have not subscribed to the Trader Talks channel, go to YouTube and just type in Trader Talks, okay? Just you type in Trader Talks, Schwab Coaching Webcast, it's going to show this page right in the middle of the page. If you have not subscribed, just click on subscribe. You can see all of our content right there on that page. Also, if you did not bookmark the playlist for this class, make sure that you do. There's the playlist, and you can see all those prior classes, which you can watch also right on your mobile device, okay? Thanks to Cameron and thanks to all of you. Stay tuned for our next webcast coming up right at the top of the hour. That next webcast, we'll see, is going to be short verticals with Barbara Armstrong coming up next. Now, remember with what we discussed here today was done for example, illustrative purposes only. Remember that all investing involves risk. And this has been the class on trading the trend using stocks and options. Thank you so much. Take care. Bye-bye.